Hey traders, Nick here looking at Take-Two. Reported earnings this afternoon, May 20th, and the stock did a complete U-turn. It went ballistic. They halted it. It went ballistic to 160, 159.9 or something like that, and then flipped, and now it's down around the 140 area, so down to here. So this is a chart that's relatively short term. It's a 2-hour chart. So if you were trading it today, you were looking at this kind of action inside the day. First of all, it was a bullish day on in the market, and it's running up already, and then another run up into the day of the earning. It was just asking too much, and then if you want to pick a trigger, they clobbered the estimates. But then the CEO, instead of pleading the fifth, like somebody said on Twitter, I noted okay, it's like they got together. Management is like, we have a great quarter. We have the cover of crisis. We don't have to tell them what we're going to do next year or something. So there's no pressure on us to put any guidance. We have a complete punt on that. Nope. So how can we mess it up? The reaction? Let's just go ahead and tell them that next year, 2021, not even the end of this year, which is where the trouble is going to be, next year it's going to be light on content or something like that. And then the stock took a U-turn. Like, oh my gosh, I mean, what? This is like the Caterpillar comment from 2 years ago from the CFO. This is the high water mark, even though we clobbered our estimates. So anyway. There is trading, and it's not a coincidence. So take the headline out. All right, let's zoom out. The daily. Not enough. I'm going to go out to a weekly. There you go. So I had lines already drawn on it. When? I don't remember. But there was some sort of a pattern. It was broadening and banging against the same neckline. So remember that neckline. And it was close to a prior neckline. So just to give you perspective, this was the 2018 start of the crash. This is where's December? This was the Christmas crash. And when all the markets bottomed, they took a dump lower. Is this probably about the same time Fortnite came out, and the free-to-play games are all the rage, and companies like this one and EA had some adjustments to do? Not sure, so you can do your homework there, but I'm speaking to the chart now. And finally, they broke out this week, earlier this week. So if you wanted to see it, let's do a replay. This is a daily, so they busted out, and they had pretty good from the neckline. It was if you didn't book profit or lock some profits, 10% rally in a couple of days, that's pretty sweet. But this explains it. So I said after hours they spiked to where? 160. My line ends at 160, 157. I think they topped at 159. My line ends at somewhere 158. So it ends on overnight, not overnight. Yeah, the overnight reaction will show a peak close to 160 and then a reversion to 140. And therein lies the opportunity. So on CNBC, Guy, I think, correctly mentioned that if you wanted to look to enter, you would look at the prior high. So that's how things happen. You butt up against a limit, and then you finally bust through the limit, and it's only natural to come. It's okay to come back and test it for footing. But which one? This is the 140. This is where it's at right now as I'm speaking. It's 4:35 California time right now. So down 4 or 5% or something like that on the after-hour action. So this is the 140-ish. To me, that would be probably too quick. What about these? I like this one where you actually have a close, 131, 132, or somewhere in the middle. So it all depends on investor time frame. So if I'm looking for an investment long term, it's not going to matter a couple of bucks here and there, right? If I'm looking for a best swing trade entry, I'd probably even wait lower. So on the weekly chart, it tells me that, let's say it has a bad day or two, and then the market has a bad day or two, then I can see it coming back to 125. 124 would be the better zone to buy. This is where, regardless of headlines or whatever, and market down and anything that can happen, this is where the natural buyers will come out, in my opinion, based on this chart. Ignore everything else, events or whatever. Is there somebody else that's reporting, like EA or any other one in this cohort? So you might want to think about that. I guess what I'm saying is, don't jump in with both feet, because falling 5% is just coming back to like 2 days ago, yesterday, not even 2 days ago. So it's not the end of the world, first of all. It's not a reason to bail on your thesis if you bought it based on a good thesis. And it's also not a reason to jump in all in. That's my opinion. So here you can see this is a daily chart. So a couple of days will bring you back to here. That's 130. It's still $10 above this. So it's barely back to here. So the fall looks big from the overnight high, but it's not really a fall. So if you wanted to draw, if you're a trend person, which I'm not, I'm a level person. I mean, I do follow trends, but I'm definitely a level person. Why don't you wait until price action and this line meet? Which will probably put it at this breakout line. That'd be nice and neat. Okay, level-wise, this is the better level of support because this is actually the point of control. For that, I just reset it a little bit. So now you can see it exaggerated. It was kind of wonky. So it is 140 right now after hours. Why not to wait for time pass and price does whatever it wants to do and then it meets or gets closer to this line to buy it for a trade. That's my opinion. You don't have to listen to it. Later, bye.